Today, digital currencies try for their best month of the year. The Fed warns Voyager to stop telling customers their funds are insured. And Steve McClurg of Valkyrie Investments recaps this week's rally and shares what investors should be watching next. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currency prices were mixed today. By noon Eastern, Bitcoin traded near $24,000. Ether was worth $1,700 and Cardano jumped to 53 cents. After some major rallies this week, Bitcoin and Ether are closing in on their best month since 2021. Bitcoin will be up nearly 30% in the past month, while Ether is up about 70%. Okay, on to the top stories. First, crypto lender Babel Finance may have lost millions by trading customers' money. A report from The Block found that Babel lost more than $280 million through proprietary trading of customer funds. The lender halted withdrawals on its platform last month thanks to mounting debt and falling crypto prices. Among those companies exposed to Babel is crypto exchange ZipMex, which filed for bankruptcy in Singapore this week. Next, another troubled crypto lender just got told to stop misleading customers. The Federal Reserve and FDIC demanded Voyager Digital stop making false claims that customers' funds would be protected if the company failed. One tweet from the company said customer funds were insured up to $250,000. The two regulators said Voyager has one or more accounts with a bank that is insured by the FDIC, but Voyager itself is not. Last up, El Salvador's finance minister says the country's Bitcoin bet is working. In an interview with Bloomberg, Minister Alejandro Zelaya said the initiative is still gaining traction and successfully brought financial services to unbanked El Salvadorans. Zelaya admitted that Bitcoin's use for transactions is low, but the government is still planning a Bitcoin-backed bond. El Salvador has purchased more than 2,000 Bitcoin, the value of which has been cut in half so far this year. Okay, for our main story of the day, we're turning back to crypto markets. I spoke to Steve McClurg, CIO of Valkyrie Investments, about this week's rally and what crypto investors should be paying attention to next. We got some long-awaited updates this week, first from the Fed on Wednesday and then the GDP report yesterday. Investors, have been highly concerned that a recession is coming, or that we're already in one. And a lot of people were looking for that second consecutive quarter of negative GDP to be able to call it a recession. That's not going to get into the semantics argument, but that's not the official criteria of the NBER, which is the official arbiter of recessions. But that is exactly what we got on Thursday. And then the market extended its rally from the previous day when we got the Fed update. So why is sentiment so positive right now? Make it make sense to me.
Yeah, well, Tanea, thanks for having us. Well, first of all, most traders were waiting for the date yesterday to see what the Fed was going to do. And with the Fed announcing a 75 basis point rate hike, they announced another 75 would likely be coming, but they're not going to reveal it until the day of at the next meeting in September. And then, of course, like you said, the GDP numbers show that we're officially in a recession and have been for the last two quarters. Which is what most economists consider a recession. So I think what happened was traders saw this as positive. They believe, and by the way, we believe this too, and talked about it at the beginning of the year, that the Fed would be pretty aggressive up until probably one more rate hike in September, maybe October. And then you have midterm elections, and they might feel political pressure to actually pull back and pivot or hold off on any of their rate hikes. Given how high inflation is and that they haven't been able to really calm it down, I don't see it that way. But traders are looking at these two numbers saying, okay, one more rate hike in September, we're in a recession, they're going to be forced to pivot. The Fed doesn't care if we're in a recession or not. Okay, the Fed actually has two things that they try to control. They have a dual mandate. Number one, inflation, and they're failing. Number two is unemployment, and unemployment rate is at 3.6%. 5% is considered full employment. So as long as the unemployment rate is below 5%, we believe that the Fed will continue to push forward with the agenda of continuing rate hikes. So I believe this rally is short-lived and will likely bleed off over the rest of the summer.
And we are in this prolonged period of bearishness, and these minor bear market rallies happen, how do you think the markets should have reacted this week?
In some ways, I believe the market reacted the way that it should have. There's two factors. I mentioned one, which is that people saw this as potentially positive, that they might change course here in a couple of months. But the other thing, and this is where it should have reacted this way, is people like to take off risk before they go on their August vacations. So before everybody heads to the Hamptons, they're waiting for the FOMC meeting, they're waiting for the GDP meeting, and taking off risk means, in this case, they're covering their shorts. So short covering typically causes markets to go up. We've seen some short covering along with short-term traders thinking that this is happening, which has caused the markets to go up. From here, though, we really believe that markets will go back down again.
What does all of this mean for crypto?
I think it'll be more correlated to tech stocks through the end of the year than not. But we are seeing some divergences, particularly because crypto fell so hard a few months ago. And that hard fall was due to some of the lending platforms that essentially blew up. We found out that some of them weren't so great for consumers. And some of them were tied to greater contagion across the board. And for the most part, a lot of that contagion has been priced in and has washed out. However, the next big set of factors for crypto is going to be redemptions in funds. So we're already hearing rumors of several funds that have lost a lot of money during that period of time. They may have been tied to Three Arrows or Celsius or BlockFi or Voyager. And given that contagion risk, we've heard of people pulling out of funds. So we think that that's going to continue to work its way through the market. It's not as bad as the last event, but it is a negative factor. And then, of course, as inflation grows, and we do believe inflation is going to continue to grow from here, and dollar strength isn't good news for U.S. manufacturing as well as wage growth. So the recession and inflation, which you can categorize as stagflation, will continue to persist through the rest of the year, which will likely cause the broader markets and risk assets to continue to go down.
How bad would a recession be for crypto?
I don't think a recession will be that bad for crypto. Usually, we've probably seen the worst of it. So a continued recession, people are likely going to not trust the stock market. They're not going to trust the dollar, and they'll move things out and into things like Bitcoin. There's also another scenario where people are looking at the market and saying, okay, crypto's bottom, the rest of the market hasn't yet. Maybe it's a good time to start shifting assets. And we think that that's the case as well. But there's so many other factors, like you mentioned. Consumer price index, for instance, in the Eurozone, which is also a really big factor, the price index was up 8.9%, which means that they're just now going into this massive inflation era that we have already started. They're slower to raise rates in both the UK and the Eurozone. We're more aggressive, which is causing the euro to trade at parity to the dollar, and for the pound sterling to go to about 120 to the dollar. So those factors are really negative to dollar strength, is really negative to manufacturing. And you got to look at yen, strength against the yen as well. So manufacturing will likely move to other areas, which will end up causing unemployment to start going up. And wages, even though they were high this morning, wage increases were high, or employment cost, we should say, it's not as high as inflation is. The other thing that I'll mention is a lot of people are fooled by the numbers. So when you see 9.6% inflation year over year, you think, oh, it's peaked. If it goes down to 8, then it's good. Well, that's not good. That's still 8% higher than the year before. Even if it goes down to 7 or 6 or 5, that's really high inflation from a year over year perspective. So we're not deflationary at all, and we're not actually peaked. That's sort of a math trick, when you're talking in percentages. And then finally, I'll mention the spending bill that looks like is going to get passed through the Senate and onto the House administration. It's a $370 billion spending bill. Government spending has been one of the largest contributors to inflation over the last 2 years. And this particular spending bill will likely cause gasoline prices to go up about $1.50 a gallon on average. this particular bill will not only cause additional spending, additional inflation, but will also cause inflation in the areas that are most important, which is energy, food, and transportation.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.